I'm Dan Isard. This is the fourth video introducing members of the IFDF for the new and unique association-sponsored program, iSuccession. There's nothing more confusing for a buyer or seller than understanding how to value a business. When you take into consideration this is a funeral business, it gets into the realm of a specialty asset. In this video, I want to teach you how to value the business and business real estate. I'm going to use certain accounting terms along the way. When I do, I'll try and give a definition for added clarity. If I confuse you, drop me a note or view the video again. To try and keep this as simple as possible, I'm going to demonstrate how to perform a valuation without using any numbers. I'm going to cover the theory. Once you understand the theory, we can easily fill in the numbers. This valuation methodology that I'm going to be demonstrating is one that my team and I have used more than 4,000 times for funeral homes over my almost 40-year career. Frequently, a funeral home we appraise may sell in the open market. This transaction allows us to confirm if our tools and techniques of the valuation were accurate. This method of valuation is constantly evolving. How to perform a funeral business valuation. There are four components to a business. We have to arrive at a conclusion of value for each of these items. They are, first, the balance sheet of the enterprise. Second, the real estate asset, if it's owned by the enterprise or if it's owned by the business owner outside of the business. Third, the goodwill. And fourth, normalize the income statement. Let me talk to you further on this process, one step at a time. The valuation of the balance sheet. Every business has a balance sheet. A balance sheet is a statement of the assets, liabilities, and the equity of a business at any one particular point of time. The point in time is usually tax purposes, and that's done at the end of your tax year. An accountant usually prepares a balance sheet, and they follow the rules of accounting to do so. But there are several points of conflict between an appraiser and the methods they use and an accountant using the rules of accounting. Accountants don't always coincide with the real world. As an appraiser, I'm trying to establish what the true economic value of an asset or a liability is. Economic value is defined as the value in the real world that these assets or liabilities would be exchanged at. For example, you might show a building at its purchase price if you're an accountant, but over time, the accountant takes depreciation. The value net of depreciation is called net book value. However, net book value is probably not the current economic value or real world value. Ultimately, the appraiser has to look for economic value of the assets and liabilities of the business. The valuation of the real estate. Nothing causes more confusion than the estimated value of the funeral real estate. Funeral home real estate is a specialized asset. It's not worth the same thing that commercial real estate would be valued at. When owning funeral home real estate, that can be a factor also. First of all, the building might be owned within the business enterprise, in which case there's an asset on the balance sheet and no rent is paid. Secondly, it might be owned by the business owner personally or in another enterprise that they own. In this case, there's no asset on the balance sheet, but there is a rent expense paid to the owner. Thirdly, the real estate might be owned by an unrelated third party. In this case, there's no asset on the balance sheet, but there is a rent expense paid to the third party landlord. Each of these situations must be handled differently. In the first case, the funeral home building is valued, as I've said before, as a special use property. It's not valued like other commercial property. Funeral home realty should be valued at its highest and best use as a funeral home. We wouldn't want to value land of an ongoing farm as if it were converted to put housing upon. Funeral homes have a specific methodology for determining the value. An expert funeral home appraisal will use this method only. In the second case, where the business owner owns the building personally, we still value the real estate, but we value it as the specific asset. And in doing so, we have to make sure that the lease payments are not overstated or understated. Overcharging or undercharging for rent would alter the business earnings. So the rent has to be normalized. If the real estate is owned by an unrelated third party, it's not valued, period. Because in a sale, it's not going to be sold. The lease is an expense of the business, and the assumption is it's negotiated at arm's length. The valuation of goodwill. The value of goodwill is a tough one. This separates experienced appraisers from those that have never valued a funeral home before. Goodwill is defined as the expectation of continued patronage. So the valuation of goodwill is a two-step process. First, we have to compute what the expected earnings of the business should be in a normal period of time. Then we capitalize the earnings. Capitalizing means we estimate the risk of this particular type of funeral business. Once we have that estimate of what the risk should be, we divide that into the earnings. An experienced appraiser knows that the capitalization rate changes constantly. Not all funeral homes are valued at the same capitalization rate. Even not all funeral homes within a state are valued at the same capitalization rate. The cash flow should be measured assuming the normalized case count and case mix, which will produce normalized revenue. Once we determine revenue, we then subtract the cost of goods, based upon that case mix. Then we determine the normalized expenses of operation, including salaries, livery, marketing, and subtract that, which gives us a normalized profit. There may be some normal operating expenses, but they need to be adjusted. For example, compensation. In some cases, the owner might be paying themselves more than they would be paid if they didn't own the business. In some cases, there may be family on the payroll that are not really working or being paid more than a non-family member would be paid. I know that shocks you. Ultimately, we're trying to compute not just normalized profit, but EBITDA. EBITDA. It's an acronym for earnings before interest, taxes, depreciation, and amortization. Remember, we divide the capitalization rate into EBITDA, and that gives us our value of goodwill. Once we have the value for goodwill, you add it to the economic balance sheet and the real estate if it's in the business, and that is total value. Different appraisers may use different methods. As part of the I-succession plan, you should get an appraisal performed by a qualified business appraiser. There are going to be 2 appraisers that'll be in the I-succession plan. Of course, you can use your own if you wish. As a teaser, in the next video, I'm going to answer 4 critical appraisal questions. I'm going to answer, what does my pre-need do to the value of the business? I'm also going to answer, what are the key factors that affect the value of the business? I'll answer, can I sell my business and retain the real estate? And the last question I'm going to answer in video 5, will the big boys pay me more than an IFDF member can pay me? These are important questions. I hope you'll return to this site to review this video as you need and the future videos. In the meantime, if you have any questions, call me or email me, or ask me when you see me at Hammock Beach for the IFDF convention.